This is Andrew Stotts of A Stotts Investment Research, looking at the Philippines, which is expensive and moderately attractive. I look at countries from 4 different angles. Let's start with the top left-hand corner, which is the GDP. What we can see here is GDP growth over the last 4 quarters is about 6.63%. That's the second fastest GDP growth in Asia. Only India is faster. Now, the drivers are private consumption and investments. Let's look at private consumption. That's up 6% and accounts for 69% of overall GDP. Therefore, a 4.18% contribution to 6.63. We can see that investment was up almost 14% and is 27% of GDP. So investment is really growing strongly. The laggard is net exports, where the country, well, it makes sense. Strong growth in the country, importing a lot of things more than exporting potentially. Let's look at the country here for a moment and let's see the performance. The yellow line is the Philippines market, and we can see though it's risen, it's still underperforming the rest of Asia ex-Japan. Part of that's because it's had a very good run over the years. The country has about 100 million people right now, and per capita GDP is just about touching $3,000. The market cap relative to GDP is about 89%, meaning probably ways to go, and only a $100 million in average daily turnover, so it's a relatively low turnover market, and there's 247 listed companies. It's got the highest valuation in Asia at about 21 times. This is what makes it less attractive. However, expected earnings growth is low. 3.4% is what analysts are expecting in 2017, and then up to about 12%. Considering that analysts are generally optimistic, it may be about 7 or 8% that the country produces over the next couple of years. Now, let's look at the A Stotts 4 elements, which we rank relative to Asia. This is fundamentals, valuation, momentum, and risk. So the first thing we can see is the overall ranking is a 6, not a 10, which is best, but above average, which is a 5. So it's moderately attractive. The fundamentals, well, moderate ROE in the past 12 months relative to Asia, not bad. Valuation, well, it's the highest PE, and earnings growth is low. Momentum, poor price momentum, and earnings momentum. So it's struggling right now. On the risk side, it's got a low beta relative to Asia ex-Japan and has moderate volatility. Again, a little bit like Malaysia, maybe we'd like to see more volatility and see the market start to turn around. Now let's look at sector performance, and we can see that this is price change over the last 3 months. But before we look at that, let's just understand the top 3 sectors. Industrial sector counts for 26% of the market, financials 23%, and real estate 18%. The best sector was infotech, which is up 18%. Integrated microelectronics is up about 39%. The worst performing was materials, which is down about 6%. And the worst performing stock was D&L Industries, Inc., which is down about 16%. So, if you want to get access to our research and articles, just do it by joining our free newsletter at becomeabetterinvestor.net/join, and I'll see you there.